Phil Muscatello and Finpods are authorised reps of Money Sherpa. The information in this podcast is general in nature and doesn't take into account your personal situation. Shares for beginners. Weekend Watchlist.
G'day and welcome back to Shares for Beginners Weekend Watchlist, where we take a close look at an individual company that you may wish to consider for your watchlist. It's not a recommendation to buy, but a way for you to learn how Stockopedia screens for value. Joining me today is Elio D'Amato, and we're talking Nanosonics, ASX code NAN. Hello, Elio.
Yeah, g'day, Phil. Thanks for having me on. And I thought I'd discuss a company that has caught the interest of many a small cap investor over time, and likewise it's disappointed. So that's Nanosonics in a nutshell.
Yeah, I've seen it mentioned a few times on Twitter threads over the years, or X or whatever it's called now. So who are Nanosonics?
Yeah, for those that don't know, Nanosonics is a company focused on manufacturing sterilisation medical equipment. More specifically, that's sterilisation equipment for ultrasound machines. Their flagship trophon 2 product is a market leader there, and it has been actually for some time. Now, trophon sterilises ultrasound probes without chemicals. It's about as big as a small microwave, and on top of selling the actual units, it actually makes money selling the consumable parts of the device, which contains a hydrogen peroxide solution, which the team has also developed. In the latest annual report, the company said that it has some 32,000 units installed globally, the majority of those being in North America, making up about 87%. So the latest result from the company was a very strong one, particularly in light of the developments in recent years.
So how did the company report this financial year?
Yeah, well, the company grew global revenue by some 38%. The important North America division, they saw a 41% jump. Now, this is very important for a reason that I'll discuss in a moment, but reasons attributed to this result included increased total units installed, increased consumables associated with that new installed base. There's increase in service revenue, and also favourable pricing, plus foreign exchange gave them a leg up as well. So all around a strong result. Whilst, expenses did rise, they managed to achieve a very, quite a rare event during this last reporting season, and that was they actually improved margins. So again, there's another reason for this. I'll explain that in a moment. But look, the improvement in margins translated to an almighty profit lift. Over the past 12 months, the company achieved a profit growth of some earnings per share growth, about over 400%. So cash improved significantly, or cash on hand. The company has very low levels of debt. The company is smashing it out of the park in terms of the numbers, and it did so at its latest annual result. The market's response, though, had been somewhat mooted after that. And to understand why, we really have to have a bit of a history lesson into the company.
Okay, so let's have a listen to the backstory about Nanosonics. And as we mentioned, it's been one of those companies that's been on the radar of many a small cap investor, and it's been quite volatile for a while. Tell us about that story. As
with any medtech business, Phil, there's always a backstory, and Nanosonics got a ripper. I remember covering Nanosonics and investing in them as well many, many years ago. Its sterilisation technology was a real game changer for ultrasound users, though while revenue has consistently grown, profit, on the other hand, has been quite lumpy. Now, there's been quite a few skeptics of Nanosonics in recent times. Look, the stock has fallen from a peak of $8.25 in Jan 2021 to below $3 in June 2022. So skepticism hit fever pitch when Nanosonics decided to bring its North American sales model in-house rather than rely on its long-standing GE healthcare distribution partner. Now, obviously, this was going to be a big deal, as the risk of killing the goose that lays the golden egg was a big risk for investors. This negative view was somewhat vindicated at the time of its 2022 result, where we saw a big fall in profitability as the cost of establishing a new sales team and a new sales process far outweighed revenue growth. Now, CEO Mark Kavanagh stood up to an angry mob of investors, claiming that his was a long-term story, and this was short-term pain for long-term gain. Now, since that 2022 result, the market has eased off the pressure. Further vindication of Mark has come following the release of these numbers. Record revenue, controlled costs, record profitability all point to a business now in control of its own destiny, as opposed to one being linked to that of GE. They've improved their operating leverage significantly, with more money reaching the bottom line now for every sale. But despite this strong result, the price still hasn't risen so much. Now, why so? That is because the other part of this backstory is the impending release of its Chorus product, a sterilisation machine for flexible endoscopes.
So tell us a bit more about Chorus, because it was mentioned in the latest AGM. It was a major feature of that.
Yeah, that's right. So Nanosonics is a one-product business in trophon, cleaning ultrasound devices, but there are obviously other possible beneficial uses for sterilisation technology, and it has always been the company's intention to release more products, and Chorus was the product flagged for next release from the company, and that was introduced to the market as a concept back in 2019 at the AGM. Now, the potential for this product is huge. With over 60 million procedures using an endoscope each year globally, over half of which are completed in the US. And also there's an increasingly larger amount of surgical procedures that are transitioning to less invasive endoscopy techniques. So reusable, flexible endoscopes are what they are, just as a bit of background. They're highly sophisticated medical devices designed to enable advanced diagnostic and interventions to diagnose and treat things like cancer and other life-threatening conditions. So the company often quotes, when it comes to healthcare-associated outbreaks, more often than not, they're linked to contaminated endoscopes more than any other medical device prior to COVID, of course. Now, despite the potential, at the time of its full-year report this year, the company flagged that following discussions with the FDA, they provided notice that they basically wanted to see certain testing conducted in the US. Now, previously, this testing had been flagged to be done at the headquarters in Sydney, down here in Australia. Now, this will necessitate the setup of a clinical simulation laboratory in the US, basically just like they got in Australia. This will mean, though, a blowout in timeframes and costs, and added to the negative sentiment. This was definitely not what the true believers in the stock who have been waiting for Chorus would have hoped. Unfortunately, the company has a bit of a bad reputation flagging, releases and extending timelines. Now, while many may point to external factors being the major contributor, the market has got a sense of the boy who cried wolf, irrespective of how good the results are.
R&D is a major cost for any medtech company. How does it affect the Nanosonic bottom line?
Yeah, it's a great point, Phil, because, look, the company has been investing heavily in R&D, as you'd expect. Now, last year, they saw an increase of some 32% on the prior year, taking R&D spending to all-time records. Now, investors would have hoped that there would have been some easing given the lofty valuations the stock sits on, but instead it looks like that they will have to ramp up now even higher given the delay in Chorus. So the company has even highlighted that the trophon business without the Chorus R&D basically would actually be more than twice as profitable than what it currently is, which I suppose is a bit of a twisting the knife further for those long-term supporters. But it is a necessary evil. Even when Chorus is released, they're going to have to keep spending on R&D, and that's just a fact of life when it comes to investing in these styles of businesses.
Are you picking shares on gut instinct? Buying on press tips or rumours? Do you struggle to find the time to keep up with the research and analysis that goes into evaluating potential stocks? Stockopedia are pleased to offer a special deal to listeners of this podcast, a 14-day free trial and a 10% discount on the first year of membership. Sign up now at y.stockopedia.com/SFB. There's no better time to access the most comprehensive, easy-to-use investing toolbox for DIY share investors. 10% off, 14-day free trial and a 30-day money-back guarantee. That's y.stockopedia.com/SFB. So did they provide an update on Chorus at the AGM, given how important it is?
Yes, they did. In terms of time frame, the company confirmed that its regulatory submission to the FDA is due to be completed in Q3 FY24. So that's basically before March next year. So the company has already established and now commissioned a clinical simulation lab on the west coast of the US, and it has Chorus up and running, and that human factor studies are now underway. So look, the geographical significance of the US means that the company will do well to use this opportunity to prepare the market for what is coming. And it is showcasing, how much more effective Chorus is at cleaning endoscopes compared to current manual processes. And it's a great story to tell, to be honest, Phil. I mean, they're showing how far more effective biofilm is removed from endoscopes relative to the quick build-up that often takes place using the current manual process despite regular cleaning. So in case you're wondering, biofilm actually, basically allows organisms to grow, including bacteria. So it's obvious why you want to get rid of as much of the stuff as you can. It's important that they're cleaned properly. Therefore, Coris is more effective, it's cheaper, and it's faster than traditional methods. So where do I sign, right? The further good news for those disappointed by the outcome of any delay is that Coris has de novo classification from the FDA. Now, that means that there is no similar solution in the medical field, and therefore it will get priority focus when the submission is officially made.
It's always important for investors to think about these kind of companies like biotechs and medtechs that, as we've pointed out, there is so much money that needs to be spent on R&D and then also satisfying regulatory requirements, isn't there? So many investors get caught up in the story of a particular company because it sounds great, but then the timeline can be quite extended, can't it?
Yeah, patience is a virtue when it comes to investing in these businesses. And the other good little point I like to remember is very rarely is your first investment in these styles of companies your last, in the sense that you often need to either invest a whole lot of your emotional time or even extra money as they require capital to continue down that R&D path. But that's where Nanosonics is quite unique, because they've already got trophon out on the field, and that actually gives them a huge leg up when it comes to funding their own R&D. And we can talk about that now.
Okay, so how does the stock rank look for Nanosonics?
Well, operationally, the company looks quite good. The standout in regards to our stock rank score is the quality score. Look, the company's profitable, it's generating strong cash, and it has very low debt. I mean, that's just the magic formula, right? So the company has full marks under the Piotrowski F score as well. So there's really little to add. The company deserves its 99 quality ranking. It's definitely up there in the upper echelon in regards to its metrics and what it was able to deliver in the latest annual result. But the failing for Nanosonics is that currently it trades on lofty valuations relative to the broader market. Now, this is a common affliction for many profitable healthcare equipment businesses or even other medtech. So you consider Pro Medicus, Cochlear, for example, all those trade on lofty valuations. Investors may have hoped for an easing in R&D expenditure. The fact of the matter is that the company's trading on a PE of above 70. It has an EV to EBITDA of 45. So even though the price has fallen some 30% since its 52-week high, it means that you're still paying a lot for potential, given that R&D expenditure and the fact that Coris is still not yet here. So this is something you need to do in regards to often investing in these businesses. You've got to pay up to play, particularly in the profitable ones, because they aren't as common as you might think. Therefore, that valuation is where it's really challenged. And notwithstanding the pullback, investors still need to keep an eye on that. However, momentum has actually held its own. Now, sure, it hasn't shot the lights out, and it's still way down from its 2021 highs, but the price is somewhat stabilised. And analysts have stopped downgrading their EPS expectations for now. So analysts overall are generally split on the business, because those that see the possible opportunities are batting their heads against those that feel it's expensive, which it is. So, and then there's others that question, the company's ability to execute given so many false starts. So it's a hold for now in the analyst fraternity. There's actually an equal amount of believers and detractors, those that think it's a sell versus those that think that it's a buy. So it's definitely split down the line in regards to investor sentiment and thoughts as to whether Nanosonics can execute on this big opportunity that they've got ahead of them.
Yeah, I was quite surprised actually when you look at the actual numbers of these devices in that are available in hospitals in the US. It's actually quite a small number, isn't it? So I guess that's part of the story, isn't it? Yeah, it's part of the story is there would be so much more blue sky involved for this company. It is
one of the things the company says. There's still opportunity for selling more of the trophon devices as well. So that's definitely not a story that's ended. And the other thing to also note is that once you install a unit, that's only part of the trick, because then it continues as a conveyor belt because you continue to sell the consumables and all those extra bits that need to go into the actual machine. So it's just like buying a printer, Phil, where you buy the printer for cheap, but then the ink costs you the bomb. Not necessarily suggesting that that's a similar model here, but obviously paying for consumables after the initial sale is a very profitable means of growing your business over the long term. And Nanosonics has proven just with trophon that they've done it successfully. If they could replicate that with Chorus, then yeah, definitely there's some huge potential ahead.
So any closing thoughts before we sign off?
Yeah, look, I suppose, now that much of the steam has come out of the price, I think it's basically, and also it started its tentative steps towards a recovery. The price has rebounded a little bit in the last few weeks. So now could be an opportunity actually to look at Nanosonics for those that have stepped aside and watched it slide until now. There's no sugarcoating it though. There have been disappointments, particularly in regards to the constant R&D blowouts, but look, the bottom line is much of its future direction will be captured in the release of Chorus. So irrespective of what trophon does or the new sales team, the new product is really where it's all at. And that is now much closer to being released than what it was, say, obviously now 3 years ago. So I wouldn't necessarily say Nanosonics is a bargain, but for those looking for a story stock with huge greenfields potential that actually generates its own cash to pay its expenses and it's high quality, then Nanosonics is someone to consider.
Well, you'd think that there'd be so many other devices that could use this kind of technology, but I suppose it's very difficult for each new device because of all of the R&D and the regulation that they need to go through. Like, I was thinking about colonoscopies. I mean, are they going to do colonoscopies?
Yes, they are. Effectively, basically, anything that requires a flexible endoscope, they'll basically be able to clean those devices, and it's far more effective where current manual processes, sometimes there's little bits of the biofilm that get caught in the little crevices and the like, whereas this, I suppose, hands-off version of sterilisation actually is far more effective at removing the biofilm from all aspects of the actual device itself. So it is a real game changer. You mentioned why isn't the technology elsewhere? Obviously, these things are heavily covered by their own patents, so once it's developed, someone basically effectively has to do it themselves, and R&D expenditure isn't cheap, particularly if you're paying for scientists to go about doing this sort of stuff. So there's a lot of protection that comes about developing your own drug technology. The de novo classification from the FDA also suggests that there's no one else that's doing it, so that's also great. And look, their hydrogen peroxide solution, which is really the key essence to this, is something that they guard quite closely. The consumables obviously relate to the actual specific devices themselves. So they've got a pretty strong moat for the moment, and they've got other things that they hope to then get onto post-Chorus release, which hopefully gets them further penetration into those North American hospitals and even more globally as well.
Okay, Elio, that's a fantastic look at Nanosonics, a great-looking company. Thank you very much for joining me this morning.
Thanks, Phil.
Thanks for listening to Shares for Beginners. You can find more at sharesforbeginners.com. If you enjoy listening, please take a moment to rate or review in your podcast player or tell a friend who might want to learn more about investing for their future.